Have you ever thought about investing in stocks with small amounts of money? This question might have crossed your mind, but perhaps you've dismissed it, thinking that investing is a game only for those with deep pockets. Well, it's time to dispel that myth. Investing is not about the size of your capital, it's about the strength of your strategy. Whether you have a few hundred or a few $1,000s, the stock market is a playing field that welcomes all. In this video, we will guide you through the process of investing with small amounts of money. We will show you how to understand the basics, set up an investment account, choose the right stocks, and make your first investment. Remember, every great investor started somewhere, and it's often with a small sum that they took their first step into the exciting world of investing. So, are you ready to embark on your journey into the world of small investment? Before you dive into investing, it's crucial to understand the basics. Investing in stocks essentially means buying a small piece of a company. These are what we refer to as shares. When these companies make a profit, they often distribute a part of it to their shareholders in the form of dividends. Now let's talk about how you can buy these shares. There are three main methods: market orders, limit orders, and stop orders. Market orders are instructions to buy or sell a stock at the best available price. Limit orders allow you to specify the maximum or minimum price at which you're willing to buy or sell. Stop orders, on the other hand, become active only when a certain price point is reached. Investing is not just about potential gains, but also about managing risk. This is the balance of risk and reward, and it's a crucial concept to grasp when investing in stocks. Now that you have a basic understanding, let's move on to the process of investing. The first step to start investing is setting up an investment account. But what exactly is an investment account? Well, it's a place where you buy, sell, and hold your investments. There are two primary types of investment accounts: brokerage accounts and retirement accounts. A brokerage account allows you to buy and sell investments freely, providing the flexibility to invest in a wide range of assets. On the other hand, a retirement account like an IRA or a 401k offers tax advantages but comes with certain restrictions on withdrawals. Choosing the right platform to open your account is crucial. Every brokerage has its unique features, fees, and investment options. You'll want to consider factors such as user-friendliness, customer service, and educational resources. Remember, diligent research is your best friend in this process. It's about finding the brokerage that best fits your individual needs and investment goals. With your investment account set up, you're one step closer to becoming an investor. Choosing the right stocks is a crucial part of the investment process. Now, this might sound daunting, but don't worry, it's not as complex as it seems. It all boils down to one word: research. Think of it as a detective game, where you're gathering information about potential suspects, only in this case, the suspects are companies in which you're considering investing. The more information you obtain, the better equipped you'll be to make an informed decision. So, where do you start? One of the first things to look at is a company's performance. You'll want to dig into their financial statements like income statements, balance sheets, and cash flow statements. These documents can tell you a lot about a company's health and its potential for growth. For instance, a company with increasing revenues and decreasing debts might be a good bet. Alongside company performance, it's also vital to consider market trends. What industries are on the rise? What sectors are facing challenges? Keeping an eye on the bigger picture can help you spot opportunities that others might miss. And let's not forget risk tolerance. Every investment comes with some level of risk, and it's essential to understand your own comfort with risk. If the idea of your stocks fluctuating in value keeps you up at night, you might want to stick with more stable, blue-chip stocks. On the other hand, if you're comfortable with a bit of a roller coaster ride, you might consider more volatile, growth-oriented stocks. Lastly, don't forget about diversification. This is the practice of spreading your investments across various sectors and types of stocks. It's like the old saying goes, don't put all your eggs in one basket. Diversification can help you balance risk and reward in your portfolio. Remember, choosing stocks wisely can be the difference between a successful and unsuccessful investment. So take your time, do your homework, and don't be afraid to ask for help if you need it. After all, the world of investing is a journey, not a race. It's time to make your first investment. You've set up your brokerage account and picked out some promising stocks. But how do you actually buy these stocks? It's simpler than you might think. Within your brokerage account, you'll find a search bar. Type in the ticker symbol of the stock you're interested in, then click Buy. You'll be asked how many shares you want to purchase. Enter the number and confirm. And voila! you've bought your first shares. Now let's talk about a strategy called dollar cost averaging. This involves consistently investing a fixed amount of money into a particular stock over time, regardless of its price. The beauty of this approach is that it eliminates the need to time the market. When prices are low, you buy more shares. When they're high, you buy fewer. This can lead to a lower average cost per share over time. Congratulations, you've made your first investment. Let's quickly recap what we've learned today. We began our journey to successful small-scale investing by understanding the basics. We dove into the importance of stock market fundamentals and how they form the bedrock for sound investment decisions. Next, we walked through the process of setting up an investment account. We learned that this is a critical first step, providing the platform from which to launch our investment strategies. We then explored the art of choosing the right stocks. We discovered the importance of research, patience, and a keen eye for potential growth. Lastly, we experienced the thrill of making the first investment. We underscored the significance of starting small but thinking big, and how even modest investments can yield substantial returns over time. Remember, investing is a journey, not a destination. So keep learning, keep investing, and watch your wealth grow.